Alright, mate. Let's get back into it. So today is Wednesday. We had PPI today. I didn't take any trades. Unfortunately, I had a meeting at work that basically went over the market open and another 30 minutes further. So I had no opportunity to look at the charts. And unfortunately missed the trade. So lovely, gotta love it. But again, another sign that the 815 break and retest model works. So what we're looking at, uh, well, firstly, it would have been stopped out on the S&P if I take it on the S&P, and then on the Nasdaq, you can see would have been lovely. Take the London low, bang, out. So if we look at what we actually had for the day, so from yesterday's PM session, price moved up and then traded down into the previous daily low. And this would have seen the previous daily high, the previous daily low model play out, taking out the previous daily low. And eventually actually coming down to the daily low before that. So the higher time frame model would have completely played out. And, you know, I was possibly wrong to adjust my stop on that second trade from yesterday. So again, further confirmation. And it's, you know, although I wasn't in the trade today and I was out of the trade yesterday, it's still a good sign and good data to collect. And yeah, it just gives me more conviction in the two models and, you know, their success rate. So as I was saying, yeah, going into today's moves, you can see both the Asia session and the London session, we were trading lower. And then we've got this displacement down after the London session into this imbalance. Slight pullback to fill this imbalance here. So if we just mark out this, I'll put that in a different color. Let's put that in, like, I don't know, yellow. Maybe something like that, so you can kind of see through it. And yeah, so I think, if I'm right, we did get the break and retest model. I'm just looking to see if we got like the ICT bearish total soup. Price trades up into a previous imbalance within a higher time frame imbalance, and then you enter off the retracement from that. We did, so 1, 2, 3 would enter short there as well, and then that could have worked, but nonetheless, that's not what we're looking for. We're looking for the 8 o'clock 15-minute candle break and retest. So in terms of that, what do we see? So we'll take this off for now. Let's delete that. Right, so we got the 8 to 8:15 15-minute candle marked out here. Price does initially push up, but what are we looking for from here? We push up, we take those higher time frame confluences and the overall trend of the market that it's in for the day. You can see we break below, price is respecting this midpoint. And then right before the 9:30 and at 9:30, we get the initial breakdown. So this gives us our direction that we want to trade in. Price then comes up to the midpoint, 25,608. Stop loss 50 points on the Nasdaq, 25,658. And then we target 150 points for 3 to 1. 25,456. So that would have been hit at 9:46. If you got in at 9:34, 9:35, that's about a 10-minute trade, 11-minute trade. Pretty nice that would have been. In terms of risk, if I was at the charts, you know, I'll probably be doing 113, I'd be doing 113 on this one. And for further draws on liquidity, you know, we could take the London low as a target. like so. And we could even, to be honest, I probably would have closed the trade at the London low. But you can see, wicks through, pulls back, comes back down again. Um, and yeah, that would have been the trade. That's the model playing out. It's very, very simple model. And, it's only a matter of time before I start collecting enough trades using this model where, the win rate will start to come through, execution will improve, and, I'll know what I'm looking for whilst doing it. Um, Interesting how on the Nasdaq we were safe with the stop. You can see the stop up here. This is just the high of the New York session. But on the S&P, the 5 point stop wouldn't have been enough due to spread. Like you can see, it would have stayed in here, like just below. But if you're trading futures, that would have been perfect. But because I'm trading CFDs, there is broker spreads. I don't pay commissions on my trades. I pay through spread. So yeah, we would have been stopped out on the S&P if we took that. Again, very similar, price trades up into this imbalance, and then price then trades up into this further imbalance created just here, like that. So we put that like that. And you can see we're developing more of a picture into what we're expecting to see in terms of direction. So it's 1, 2, and then that trades back up. You get one more chance. If you want to enter right at the top, you could probably put your stop above this. But again, that's not my model. What I'm looking for is the midpoint entry here or here. Ideally a little bit later into the session because you get the initial volatility from 9:30 opening. And yeah, again, 3-1, that would have been hit. And does that line up with the London low? Eventually it does. If targeting the London low, that could have been a 4.5-1. So, a little bit frustrating because I couldn't trade it today. I was literally away from my desk in a meeting. So, yeah, a bit of a bummer, but nonetheless, still nice to see. And, if we compare this price action to yesterday's price action, I mean, in terms of the drop, it's fairly similar. Like, price comes up, tests twice, and then comes down. But yesterday's price action was just like, it wasn't as clean as today. And today would have been a nice trade, basically. But yeah, so that's the move. We've got unemployment claims tomorrow. Thursday might see a slight reversal. It depends. We're looking at the 4-hour chart. We got this imbalance that price is traded down into. We also have this volume imbalance here, so that could be a potential target for the week. And yeah, interesting. Just little things to note. So I'll have another look tomorrow. We'll see what's going on, and then if there's no setup, there's no setup, and then that'll be it for the week. And yeah, in terms of crypto, Bitcoin's starting to make a little bit of a reversal here on the daily chart. On the weekly, we could just be trading back up into this imbalance to come further down. But nonetheless, my holdings in MicroStrategy are doing a little bit better today as a result of that. If we just type that in, you can see prices sort of reacted off that. What we at? 177. It was hanging about 185, 187 earlier. So that's dropped off a little bit coming into the PM session. And silver is still absolutely tearing away at $83. So I closed my position at 71 around here. And then yeah, it's still going, but for a 60% profit on that, I'm not too bothered about missed gains pretty much. So bit of a shorter video today. I think that's going to cover everything, and we'll go into tomorrow with fresh mindset, see what opportunities are there, and yeah, that's going to be everything. One more reminder for myself before I go: don't trade Friday. Don't break the rule. Don't trade Friday. Simple. Need to get that in my head. Right, in a bit.